Hello there, this is James, and you're watching the latest episode of our Primus Live webinar series. Now, before I get on to the topic of the day, and of course, introduce you to my very special co-host, please remember, these little episodes are for educational purposes only, and no way whatsoever to be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Now, let me introduce you to my co-host. She's a very, very special person. Her name is Kaya, and she is our head of investment research. She's worked as a portfolio and investment manager, exposure to both public and private markets. Before we were lucky to get her, Kaya was actually a senior investment associate at a hedge fund in Singapore and a vice president at Bank of America, Merrill Lynch. Welcome, Kaya.
James, always a pleasure. How are you doing today?
Doing really, really well. And the pleasure is all mine, as always. And can I just start off by saying you look incredibly festive today?
Thank you so much. So since this is our last live before Christmas, I decided to wear something more festive, so hence the red dress.
Perfect. And you look dashing in red, if you don't mind me saying so.
Thank you.
You're welcome. So, should we, first of all, like I said, we obviously got our topic of the day, which is obviously trading psychology. Before we go into that, though, should we have a quick catch up about what's going on in the markets?
Sure. So the markets continue to rally. That's sort of the short summary. I pulled up a few charts as well for us to go through today, just to do a bit of a touch base. Where do we actually stand and how do we go into the holiday season? And that ties back to our previous conversation last week, which was about Santa Rally, which was a phenomenon we see in December, whereby US equity markets tend to rally quite a bit, especially around the week of the Christmas. And this is the last full trading week, which is very important, meaning that this is the last week when you're going to have all 5 days of price action, and you're going to have all 5 days of actually institutional traders being in the office and trading. Next week onwards, you can expect much thinner liquidity. You can expect choppy markets and most likely quite a bit of volatility as well. However, as of 17th of December, I have a chart here in front of me, which you guys going to see as well. So I'm using TradingView, and we're looking at S&P 500. So our regular viewers know that S&P 500 represents sort of the it's the 500 biggest US companies by market capitalization. And we're going to run through the same indicators that we've always done so far. Regular viewers, you know what I'm going to talk about. Those that don't know some of the indicators, please go to our YouTube page and find our previous technical analysis webinars.
Yes, we've done two of those, haven't we? Actually, we got two of those are available on YouTube.
We have two, and we've done a pretty thorough cover, I would say, when it comes to those main indicators that I like to use and that you like to use.
Yes, of course.
So S&P 500, looking at moving averages here at the top of the screen, very bullish. We see the rainbow colors formed in a beautiful manner, meaning that the short-term, medium-term, and long-term moving averages all support bullish price action. The legend is here on the side for those who want to check the legend as well. What I would mention, though, is that I have a Bollinger Band also drafted on the chart, and you can see the price is really testing the upper Bollinger Band level. So I would expect at some point this price to get stopped by Bollinger Band, or if it breaks higher decisively, we can have very, very big move higher. But until Bollinger Band offers resistance, I would say we're going to continue trading within the channel that we see here.
Sorry, Kai, is this a daily chart we're looking at, yeah?
This is a daily chart. Thank you for asking that. I should have mentioned that. I generally look at daily charts, just the force of habit, because 4-hour charts, they tend to be much more choppy again, and they don't really show, at least for me, the movement I want to see when I analyze the markets.
Right.
Looking at RSI, which is the relative strength index, at 65 currently, so we are still at neutral level. Slow stochastics currently at 76, so not overbought yet. And DMI of 22 and DMI plus at 29 and ADX at 22 tells me, first of all, no overbought levels yet.
Mm-hmm.
There's still energy in that momentum, and bullish trend is clearly dominating. S&P 500, my sort of short summary is that still bullish and still has room to go higher.
Absolutely.
Okay, gonna pull up Russell 2000 as well. I'm a big fan of Russell 2000 because that's an index that reflects the real economy in the US. These are the small companies, the middle-sized companies that really do rely on US consumers to buy and consume. So it shows the health of the US economy, and whether we like it or not, US economy, they are the driver for the world at this point.
That's the world's number one economy still, isn't it? So of course it will
exactly.
be. Yeah.
It's the US middle class that determines how we're gonna go about next year, basically. How much they are gonna buy new TVs.
Exactly. Do you think the Russell 2000 is a clearer, better indicator of how healthy the US economy is compared to the S&P 500? You think this is a better way to measure how well the actual economy is doing? Yeah.
Yeah, and my sort of logic is simple because S&P 500 at the moment is dominated by basically 5 companies, the FANG. So 23% of S&P 500 is those 5 companies, and those 5 companies represent actually, I would say, capitalism at its finest. They have access to the debt markets, to the equity markets, and moreover, they are very global companies. So Apple doesn't even earn most of its revenue from the US. I think the rest of the world portion these days is much bigger. So if you really want to see how the US economy is performing, always Russell 2000, because these are the companies that operate within the US and rely on the local financing, I shall say, in order to get access to capital markets. I mean, Russell's chart is also extremely bullish. It's one of the best examples of a bullish momentum because you have higher highs and lower lows. All the rainbow nicely stacked, the moving averages. But with Russell, I would say RSI looks already extended. So we are at the 73 territory right now. And stochastic is also at 86 here. So we're probably at the higher end, at the higher curve of the trend, if I can put it this way. At some point, I would expect a bit of a pullback because, again, we have a resistance here at the upper Bollinger Band level as well. But, James, look at this ADX chart here. It's just gorgeous how it continues to pick up the strength here. We're currently at 45 when it comes to the strength of the trend. And DMI plus clearly dominates. So in terms of the momentum, it's still there. There's still energy. However, looking at RSI and stochastic, we may have a bit of a pullback at some point.
Right. But basically at the moment, it's still sort of giving us an indication that we still have a very bullish trend at the moment. I've also noticed you've used red and green, which is still very Christmassy colors as well on the DMI there. So very good.
I didn't even pick that up myself. 100%.
Yeah.
James, let's give a look on gold as well. So you love gold. I love gold.
My favorite.
Everybody loves gold.
Yes.
Gold looks very interesting. At least in my opinion. So I'm going to zoom into the daily chart here. So we started off the month of November, I would say, gold being quite bearish. So we broke the 200-day moving average resistance level here at end of November. Since then, the price has recovered extremely well. And I see 17th of December, we have broken 50-day resistance here and testing the upper Bollinger Band level.
Yeah, I was watching this today actually, and this is a key level because it was also on the Fibonacci retracement. Because I'm a big fan of using the Fibonacci retracement on a daily with gold, and it is around this level as we're looking at now. Is looking very interesting as a potential resistance. If we break it, then by all means we could see a big return to form for gold. Potentially
100%. And another indicator that tells us that bullish trend is sort of at play is looking at the DMI plus, DMI minus. So as of yesterday, DMI plus dominates, meaning that the bullish trend dominates the bearish. But ADX is a bit weak. It's currently at 20.2. So it's sort of building up momentum until it's 25. I wouldn't say that a strong trend has formed. But RSI is still neutral, stochastic on the borderline of being 77.9 at this point. So yeah, a bit of energy in gold. So I think this is definitely an asset class to watch over the Christmas period as well.
Absolutely. And December tends to be quite an interesting month for gold. It tends to
It
make
is.
quite a bit, a lot of moves, bullish moves in December. Not always, of course, because it's not that easy, but quite often it does seem to take a lot of attention of the markets around this sort of time. So that could be
Yeah.
something, definitely something. Well, I'm going to watch it because it's one of my favorite assets, but definitely an asset to keep an eye on for the remainder of
And
the
you
month.
mentioned gold actually during our last webinar, which
I
was
did.
again around Santa Rally, and gold is
Yeah.
something that exhibits that phenomenon that it tends to pick up during the month of Christmas, during the month of December. But again, there's some explanation to that, or at least people try to explain. That's what we do. We like to give narrative to
Yes.
everything, right? So
Yeah, of course.
gold tends to be a bit of like a hedge that traders like to take or like to have when they go on holiday. Because when equity markets crash, then gold tends to perform. And when equity markets rally, then gold, it never really crashes until you really have a proper crash. Say we had back in March. So it's a bit of like an anchor, I shall say, when you can't be actually physically trading. So have gold. Be prepared.
There's an old saying actually. Again, this is a saying, ladies and gentlemen, not to be taken as advice, but there's an old saying which goes: put 10% of your wealth into gold and hope it goes down. Because if it's going up, that means the rest of the market aren't doing so well. But I remember that saying very, very, very clearly.
Because you talk about FIBO retracement level, let me just see if I'm going to pull a FIBO retracement. Then I'm going to use 9th of November high, and I'm going to pull that to the low that we have here.
Yeah.
And it's lovely. Again, doesn't want to stick. Okay, now it's done. So I'm going to zoom in a bit. A lot of colors here. So those of you who are not used to looking at FIBO levels, don't be concerned. Go to our previous webinars about technical indicators. We cover FIBO there in detail. But beautiful. I mean, literally you can see where the price has stopped. It's at 50%. Okay, FIBO line here. And also we've gotten a bit of resistance at 39% level. And then the 24% level, not as clear cut, but it's important also to understand that when you do technical analysis, it's never about the exact level. It's always a range when we talk about resistance and support. So when I say a specific price point, you can always add a bit of like plus minus here and there because it's still emotions that drive the markets.
Of course, it's really just sort of giving you an indication of a potential area of interest, which is always very, very useful, incredibly useful.
Well put. I like that area of interest. I'm also going to pull up DXY. So those who trade dollar, you know what's happening. It's 2-year lows now, I think. Since 2018, we haven't seen such level here. So DXY basically stands for a basket of currencies based on trading volumes against US dollar. It's 55% euro. So, euro USD plays a lot of role in this particular one. However, this is a good example of a bearish chart. I'm just going to remove this line. I have some resistance here, but it's basically reverse rainbow, indicating a strong bearish trend because 8-day moving average is offering resistance level, and 200-day moving average is high. So meaning it's very strong short-term and long-term bearish trend at play. RSI, screen jumped. RSI sits at 43, right? No, sorry, it's at 20 right now. So it's borderline being oversold. Stochastic 9 signals oversold levels, but DMI at 24 and ADX at 24, DMI minus at 26, clear bearish trend gaining momentum. So looking at this, I wouldn't say that dollar is going to gain at some point unless we have a big fundamental news coming out.
Exactly. Something massively to change it. It's only the RSI, which is sort of just giving a slight indication then that it's maybe oversold. The rest of the indicators are still continuously to point to more of a bearish trend on this. Yeah.
Exactly. Yeah, that's how I interpret that as well. And I'm just going to pull up one last instrument, which is US oil. So oil has been, first of all, historical lows this entire year, basically. We went negative with some of the futures contracts, right? Which was like
Yeah.
unprecedented. And then we were trading in a channel for a pretty long time. So I think since early June here, we had this sideways movement until this magical month of November,
Oh,
where
yes.
suddenly markets started moving again.
Mhm.
And we are seeing a pretty decisive move higher. Now oil's currently at 48.27. There was an announcement that US, I even wrote that down, how it was spelled. There was a surprise decline in US crude stockpiles, which gave a bit of a boost to oil as well, from fundamental side of it.
Yes. Yes.
But
I think it
yeah,
was minus 3.15 million barrels. I think something like that.
yes,
It's quite a drastic number. So yeah. So
yeah.
that's
And I think oil also reflects the reopening narrative that we get now with the vaccine news. So it's sort of showing that the reinflation trade is back on. Definitely, investors are hoping that transportation picks up and construction and wherever you use oil. I mean, it's literally the fuel for the world. So literally and figuratively. So whenever you see price picking up, you see investors' hopes that the economy will also pick up. And from oil, what I can see, it's not overbought yet. It's borderline 71.8 for RSI, stochastic 91. So, it's not a strong signal that we have reached a overbought levels. And DMI plus 20 sits at 29 at the moment. ADX at 34. Strong and growing bullish momentum at play.
So again, this is obviously being driven by optimism, as you've already rightfully said, because obviously with the vaccine, things could possibly get back to normal, which means industry, manufacturing, everything can restart again, and obviously the demand for oil will then potentially skyrocket on the back of that, which is good. I have an interesting fact for you, actually. Did you know? I'm always amazed by this. When people talk about WTI or talk about oil in general, they think airplanes, cars, factories, and all this sort of stuff. But in fact, it's used in day-to-day products as well, such as lipstick. It's used in lipstick.
Unfortunately, I'm aware of that. Thank you for reminding me. Thank you for reminding me. Oil is used as some sort of ingredient in most products that we use. Like even petroleum products are pretty much everywhere. You can't go anywhere without touching petroleum. But yeah, thank you for reminding me that I apply oil into my face.
That's okay. It's my pleasure. My pleasure. Not a problem.
Not a problem. But James, what do I read from all these indicators? So we've covered now equities, we've covered gold, we've covered dollar. So definitely risk on sentiment continues. Only thing that may make me doubt in that narrative is the gold. But at the same time, US dollar is so suppressed. Of course, gold is going to pick up in price. I'm just surprised it actually took so long for gold to regain some of its position. But looking at the charts, risk on sentiment is on. Santa rally is in place. Those who trade equities, I think December will be an interesting month for you for sure. US dollar. Who knows? Who knows what's going to come from the Fed? By the way, did you watch Powell's testimony yesterday and the speech?
I did actually. I did watch it. He's a little bit more entertaining than Janet. I'll say that.
Oh, for sure. But Janet is coming back, as you know. Janet is going to be the Secretary of Treasury.
Yeah, she's going to join in the Biden team, Biden-Harris team. Sorry, so she will be back. As long as she doesn't do too many press conferences, I'll be okay.
Yeah, exactly. She's entertaining in her own way, But a few things I picked up from Powell was that, they are going to continue with the asset purchases. We're going to see another $120 billion every month with treasuries and mortgage-backed securities until substantial further progress in the economic data. But something else that I picked up from the news today is that, 4 European countries that now have negative 10-year yields. This is going to surprise you. Maybe it won't, because you read the news all the time. But it's now Italy, Spain, Greece, and Portugal. 10-year yield is negative.
They were some of the pig nations back in the day, aren't they? Weren't they?
They are the pig nations back in the day, and if you think about U.S. treasuries, the U.S. being sort of the risk-free rate. Whenever you do analysis, you use U.S. rate as the risk-free rate. But suddenly you decide that Italy is less risky. Italy's 10-year debt is less risky than US 10-year debt.
Yeah.
For me, that's a warning sign, to be honest.
Very much so. Very much
Yeah.
so. Big eye opener, actually. That really very
It makes me
surprising.
concerned about those people who are actually trying to put money on the side for their pension. How are you going to do that if European debt is basically all negative? So I mean, negative interest earning, I should say. What do you invest in? You can't invest in fixed income.
Well, that puts a damper on a few things, doesn't it? We would be very bullish about the market just then. Now we're a bit doom and gloom.
I wouldn't say that. Now I think you're twisting my words a bit. All I'm going to say is that I think that the risk pricing is a bit off in the markets because you have so much central bank activity. You just can't determine the price point anymore. How do you price a risk these days?
That's true. It's very, very true. Yeah. Oh, fun times.
Fun times. Yeah.
Fun times.
But James, with that, how about we talk about the psychology of trading?
That's it. This is one of my favorite topics, actually. I love this topic. And I think it's a huge thing that when you can understand it and try to master it, it can really become a major part in helping you become a profitable trader. Should we start off with the 5 stages?
One comment. I think we should have started our Primus Live webinars with this particular topic, because actually psychology, it's the most important thing I find that retail traders can know about, because you can't really master it as such. At least I find that you can't master it. It's always a process. And effectively what you're doing here, you are fighting yourself.
Yes.
You're fighting your own emotions, you're fighting your own thoughts. And I find at least this being one of the most difficult thing to do. Personally, when I trade, I have a gazillion arguments in my head with myself. I mean, you have no idea how much is happening there. But yeah, I have developed certain tools that help me. And, we would like to continue with going through some of the stages that new traders go through generally.
Absolutely.
So, first of all, my favorite, unconscious incompetence.
Yes.
This basically means that, let's say you're a new trader, you look at YouTube videos, you go to Bloomberg, and you're like, okay, cool, I'm going to trade now. Put in a trade, maybe first trade, you get lucky, you win some money, you're like, yay, I am the hot shot.
Yeah.
You put in a new trade and you lose money. And you never do the analysis why that happens.
Yeah.
What was the reason behind that? It's just you're unconscious and you don't know what you're doing.
Exactly. It's basically a case of like people jump in not knowing anything or any understanding of the market, how the instruments work, technicals, fundamentals, just jump in. And like you rightly said, the worst case scenario, they got lucky and they think they know what they're doing, but they end up losing. And it's unconscious incompetence is very much the very beginning, what most traders go through.
Yeah, I love the fact that whenever you have some sort of asset class that's performing extremely well, and I think Bitcoin is a great example of the last maybe 5 years, suddenly everybody wants to trade. And I think a lot of the people, they get on the bandwagon, maybe they start trading, maybe some of them are contrarian traders, they take short positions. And whenever they lose money on their trades, exactly this unconscious incompetence kicks in because, but everybody's trading Bitcoin. How can I not trade? Everybody's winning money, earning money. How can I not be on the same bandwagon? So yeah, unconscious incompetence. Most traders stop there when they start losing money.
That's it. Then they move on, of course, to the second. Well, most of them do, but not all. Some then move on to the second stage, which is conscious incompetence. And I believe this stage most retail traders get stuck in. And this is probably the most difficult stage to break away from. I mean, because this is the sort of stage where the wannabe trader knows they need some education, knows they need to start learning something. So they then do their reading on technical analysis, their reading on fundamentals. They maybe even take some really expensive courses. So they think they have the grasp of what works and how things work, but they still continue to lose. And at this stage, what they tend to do then, because they think they've learned some stuff, they shouldn't be losing. They start blaming either the broker or market conditions or the teacher they've taught them or the indicators, and they don't actually grasp what they actually need to do. And I think so many traders get stuck in this stage so many times.
I love it, yeah. And blaming the market is one of my favorite excuses.
Yeah.
I think for me, one of the big acceptance with trading was that you have to accept the price as the value. And we've covered this during our fundamental analysis webinar when we talk about what is fundamental analysis.
Yes.
So fundamentalists, they try to come up with value for whatever asset class or share or currency. There has to be some sort of intrinsic value, right?
Yeah.
But with trading, I find you often have to accept that price is the value. The market determines the value, and that is reflected in the price. So you can't blame anyone. You just have to take it as it is. So I think the acceptance is an important part for the conscious, incompetent trader.
Absolutely. Very few, though. Very few, and this is what some of the stuff that I hope these webinars and these episodes of Primus Live will help you. Few people, though, do get to stage 3, which is the aha moment, don't they?
And the aha moment is when you realize it's the market that determines the price.
Yes.
It's the rules that are important. It's maybe the mindset, maybe the psychology. You come to some sort of realization that, there are things that I can't control, and I have to be comfortable with these things, and I have to know how to play the game in a way. And that's I think the moment where you just accept it, just let it go.
Yeah. It's the moment where you sort of grasp all that and you start taking responsibility for your actions. You don't blame the market. You don't blame the market. You blame yourself if you lose. So you take responsibility. And at this stage, most traders who move on to stage 4, stage 5 realize they need to develop a trading plan. They need a strategy, and they realize that's the next step for them to go on to. And when they got this aha moment and realize all these things, then they can move on to stage 4, which is conscious competence.
Conscious competence, exactly. Yeah. That's the phase where you are doing pretty okay. Probably you're earning money. Yes. Maybe you're starting to enjoy the process a bit, but you still have to think about it a lot.
That's right.
So you always have to conquer yourself almost every day. And you have to think, you have to enforce. And I have to say, probably this stage, and I'm not saying I'm at that stage yet. It's hard to say where I'm actually on this chart. I was thinking about it today. Where am I? I think maybe I'm between the sort of aha moment and conscious competence. But this is the moment where I think it's the hardest, because you have to force yourself constantly, force, and you know the things that are important. Unlike, let's say, non-conscious incompetence, you just take trades. Maybe you even get a thrill, you enjoy it, excited, right? But conscious competence, it's not pleasant, because you have to force yourself. It's same as waking up 7 a.m. in the morning and having cold shower. That's what I compare this to.
That's a great analogy. Yeah, because see, a conscious competence. Sorry, this is where you have to be, as you rightly said, extremely disciplined. And being extremely disciplined can be very, very scary, because like you rightly said, you have to make sure you stick to your plan or you stick to your strategy no matter what. And that takes a lot of discipline, a lot of control of emotions as well. But when you do this, eventually you get onto the final stage, which is stage 5, of course, which is unconscious competence, which when everything what you're doing in stage 4 comes second nature to you. You don't even need to think about it. It's just, part of you, part of your skin. So that is the final stage, which really a lot of people try and aim to be or aim to get at.
Yeah. So this is the flow state. I mean, this is really where you get into the zone. You trade, you enjoy the process. You don't have to think about it. Everything comes automatically. But it's really the I don't even know how many percentage of traders actually reach that stage. So I'm not definitely there. It doesn't come automatically. I still have to think about what I do. I still have to enforce rules. I hate myself every now and then for that. But it's part of the process. And once you really get to this unconscious competence level, I think that's when you can actually, not to say earn money with trading, but that could be the main source of your income at that point. Because I wouldn't want to have a state whereby I don't enjoy something. And I'm going to be really honest, I don't enjoy trading, which means I am not at stage 5 yet.
Yeah. You're still, fair enough. Well, there you go. So 3 and 4, between 3 and 4, that's where you are, yeah? That's where you
3 or
reckon.
4, I think so, yeah.
Yeah. Well, I have no doubt you'll get to stage 5 at some point, and join the very few people who are actually at stage 5. Definitely.
Yes, I hope so too. Okay, moving on to the next slide. Managing emotions. I like this greed and fear, sort of two extremes of that. Humans tend to be driven by two things. Either it's greed or fear. So either we want to gain something or we just want to stay alive. So two sort of opposites. And how do we manage emotions? So a lot of our emotions, especially when it comes to trading, because there's money on the line. And first of all, before we even start with this particular slide, do not ever trade the money that you can't afford to lose. That's I find the absolute basics, because if the money is essential for you, the emotions are going to be just tenfold of what they normally would be. So trade money that's disposable income that you can use for investment purposes. And I think managing fear and greed is much easier in such situation.
Yeah, you said something brilliant, I think a few episodes ago, and you're absolutely right. You should never invest money which is going to take food off your table. I mean, the money you could technically afford to lose, because you need to consider it like business expenses. You said that you need to be in a position where your losses are business expenses, and I think that hits it on the head. Nail on the head.
And that's on the slide as well. But the way I do, when I look at my budget, and again, not an advice, just giving my personal perspective, the money I put on the side for trading, that actually sits in my investment bucket.
Right.
And I put that on the side. I never take it part of my daily budget. It's gone. The moment it's in that, I shall call it account, it's actually mental account, it's gone, doesn't exist for me anymore. So I think that's the only way I can sleep at night. Otherwise, I could not have open trades and go to bed and, actually have a nice 8-hour sleep.
Yeah, yes, good. Well, that's
when it comes to,
so that's the way to do it. As long as you can sleep and you have that sort of mindset that, like I say, you have it in your sort of account and you're disciplined in that way, then of course you can rest easy. And that's part of the process.
Yeah, and clearly, in order to manage emotions, risk management is a key part. So coming back to the presentation or the webinar we had 2 weeks ago, if I'm not mistaken.
2 weeks ago it was. 2 weeks ago.
And you have to have really a journal that defines the rules for your trade before you enter any trade. So you have to have some sort of, I don't know, Excel sheet or notebook, whatever you want to have. Make sure that you write everything down. This is my thesis. I think the asset class is going to perform this way. This is the day I'm going to enter the trade. This is my profit taking level. This is my stop loss level. And if you have these things in place, I find myself to be much calmer, because I know I can't lose it all. My stop loss is there. Yes. And you have to stick to the plan.
Yeah.
You have to stick to the plan.
Exactly. Discipline again, like we said. Discipline again.
And I also think that you shouldn't feel strong emotions while you trade. So one of the points I've identified here, you shouldn't feel a thrill or anxiety. So trading should be boring. It's never boring as such, because you always take, conscious actions and active decisions. However, when I start getting this thrill, that's a warning sign for me. Maybe I should take a break. Why am I getting excited? This is work, or not to say you shouldn't be excited by work, but I find that a lot of the prefrontal cortex activity, the thinking brain, gets a bit suppressed the moment you start having emotions that dominate your thinking process.
Yes, you're right. Yeah, so because slowly then maybe your emotions are going to slowly start taking over, and when emotions do, that's when mistakes tend to happen.
Yeah, and very important, a bit off the topic, but emotions are generated in a different part of the brain than thinking. So we have prefrontal cortex where we think, and then you have the amygdala, which is basically the source of emotions, especially primal emotions such as greed and fear. So emotions never go well with thinking, unfortunately.
Yeah.
The paradox of human nature, I shall say.
Yeah.
So when strong emotions emerge, then you should take a break.
Absolutely. It's an interesting, it's the same part of the brain which does develop the emotions also controls your memories as well.
Oh, interesting.
So that's, for example, if you've had a nasty experience with fire, say, for example, as a child, every time you see fire as an adult, you will feel fear because you remember what
Sense.
happened. So that would develop anxiety for you. So that's
That makes
really
perfect
interesting.
sense.
Yeah.
And we put there a sort of a comment as well, how to relax. So my personal technique is mindful breathing. So I do box breathing, which is
Okay.
you count to 4 for inhale,
Right.
maintain, count to 4, exhale by the count of 4, maintain 4, and you do that. Maybe a couple of cycles, 3, 4 cycles. Helps me personally. US Navy
Okay.
uses that as well, by the way. So
Oh, really?
they
Interesting.
got that tip from me.
And there you go. See, there you go. You are a guru. See, filled of a fountain of knowledge.
You're too kind, James.
I know. Yeah.
Alrighty, we have one more slide for you.
Okay. Perfect.
Yeah, this is a bit of a summary slide, I shall call it. It's just the importance of discipline and rules. Like, why do we
Yeah.
need to have the discipline? Why do we need to have the rules? So,
Yeah.
first of all, emotions are always present. We have to acknowledge and accept that they're there. I would never tell anyone who's a beginner trader that, oh, get rid of your emotions. No, acknowledge them. They are there. And
Yeah.
sometimes what I think what people should do is identify the emotions that you feel. Am I feeling happy? Am I feeling sad? Am I feeling anxious? Am I feeling, this thrill? Where in the body does this emotion generate? And then you start realizing, what do you actually feel? Quite often it's anxiety that I find that drives me when I do my trading decisions. And that's a worrying sign for me, because when you are anxious, the body is giving you a signal that maybe you are, again, fearing for something. Maybe I'm not
Yeah.
making the best decision because my thinking brain is not optimized enough to decide, am I going to enter this particular trade now? So identifying emotions is important, and accepting them that they're there is also important. Then I think it's important to decide that you rely on the rules. Active decision is important. Say it out loud. I choose now to follow all my rules. I'm not going to hope that my losing trade is going to reverse at some point, and I'm not going to honor my stop loss. That is the single biggest mistake I find that traders are doing. They're hopeful that the losing trade is going to reverse, and then they're going to take too much loss on single trade.
That's actually a really good point, because one of the other things when it comes to trading psychology, I find, and one of the most difficult things for people to sort of conquer, is the battle between hope and fear when it comes to trading. Hope and fear is when, for example, you have a winning position in the market, you start getting that excited, happy feeling because you're actually being successful. Then what sneaks in is fear that any minute that happy feeling is going to go away and that position's going to close. So you end up snatching at the profit, taking a small profit. Whereas when you're in a losing position, you see it getting bigger and bigger, you hope that it's going to start to come back round, because you remember in the past, when you've closed a position, the market seems to spite you and it's bounced back up. So then you hold on to it, which means your loss gets bigger and bigger and bigger and bigger. And I think you're absolutely right. This is one of the most difficult things I think most traders tend to, or try. Most difficult things, I say again, that many traders aren't able to conquer.
Yes, and I always think that you can enter the trade again. Say that you have a losing trade, cut the loss early, and if the position reverses, you can just enter the trade again. I think these days, trading is not that expensive in terms of fees, and FX Primus is very transparent about all the fees and everything that we charge. So you can always get back into the trade and participate in the upside and not to take the downside.
Yeah, very true. Very, very, very true.
And what I also like to emphasize, James, is that with practice, it becomes automated.
Yes.
Meaning that is the fifth level, the unconscious competence level. You don't think about it anymore. It doesn't force mental activity to think about, oh, what should I do here? What is the stop loss here? You just know it because you've done it so many times. That's where you are in the flow state. You enjoy the process. Time goes by, you're just completely in the activity. And sort of the last point I want to bring up: if you're constantly still losing money, when you follow your rules, when you cut your losses, when you take your profit, then I think maybe it's time to go back to the basics. Have I formed a relevant thesis?
Yeah.
And have I established appropriate rules? So that's when you start questioning the process itself.
Yeah. Yeah. Go back to basics. I love that. There's the old saying again. I love my sayings. The reason why we fall down sometimes is because that's how we learn to pick ourselves back up. So there you go. There you go. I believe we've got some questions. Should we move on to some questions?
Some questions, yes.
Brilliant. This is probably my favorite segment of our little episodes, because I love the interaction of our viewers. I love these questions coming in, because don't forget, at the end of the day, we produce these little webinars for the benefit of everybody's education. We want you to learn, so by giving us feedback, writing with questions and interacting with us, we know we're on the right path for what sort of information you may need. Now, the very first question is very related to this topic, and it is: how can I develop my trading psychology?
I don't even know how to answer that. I think the best way is to, again, think about where do you stand as a trader? Who are you as a trader? What is your strategy as a trader? What is the psychology you need to follow as a trader? Different trading styles, they do require a bit of different approach, I would say. But follow our guidelines.
Yeah. Watch this episode.
That will
help you develop and identify psychology. There you go. You can keep, wind it back and watch the little bits again. The other question again.
I want to say practice.
Exactly. The other question I have here is, again, very similar. I'm a new trader, and I'd like to ask you: how do I know about my emotions? How can I identify them, and how can I manage it or manage them?
Love the question. First of all, welcome to the trading world. But how can you identify emotions? I mean, the easiest thing is when you feel something, just feel. Just take time. Where in the body do I feel this? For me, personal example, I feel anger in my throat. I know when I'm angry because it starts pressurizing here. So when you start doing this, you can also take notes. Where do I feel the emotion? And with time, you start realizing, you start identifying, this is greed, this is thrill, this is anxiety, this is happiness, whatever. And then you start realizing, oh, I feel this right now. Is this a good mindset for trading? Do I want to feel like this when I'm trading? And negative emotions are never good for trading, because again, our brain is sort of in that flight or fight mode. We may not do the most optimal decisions at that state. In that state.
Do you think, like I say, develop it? I know we talked very much about this on a few episodes back about risk management, about the trader's journal. Do you think in some ways a trader's journal, you can include writing down your emotions at the same time on certain trades to help you try and learn?
It's brilliant. I think it's brilliant. And, I've seen templates of trading journals where there is a section about emotions as well.
Yeah.
I think it's one of the, hands down, best advice so far. I'm going to add that to my trading journal as well now.
There you go. You can do even like what's it called, emojis? Happy face, smile face, scared face,
I am
angry
not that
face.
young. I still use sentences.
I am definitely not that young. I had to think of what it was called. So you know what I mean. So I don't. I don't know. Another question, slightly not related to the topic, but I love the question anyway. Just wanted to know, how does one trade? And I'm trying to decide. I don't have a lot of knowledge of trading, but I'm interested. How can FX Primus help me in regard to learning and trading?
My friend, you've come to the right place.
Exactly.
First thing I would recommend is, we've done quite a few webinars now. We've gotten really good feedback from our viewers. So I would definitely recommend, please go to our YouTube page. There's the video section, and you can see the previous lives from there. You can see all the Primus live sessions. We try to do once per week going forward as well. So we're gonna skip next week because it's the holidays week, but we're gonna come back the last week of December, and we try to give as much education and knowledge as we possibly can throughout these sessions. But there are other ways how to sort of get to the bandwagon of trading. FX Primus webpage offers quite a bit of material. And I am also available as a tool, meaning that there are clients with whom I do private sessions. There is client tiering category, I shall say, depending on various things. But please reach out to your account manager with FX Primus, and I'm sure that dedicated person is more than able and more than happy to give you some sort of pointers how to proceed with your trading career.
Yeah. I say that quite a lot of our team, sort of the senior account managers, they do a lot of obviously one-on-one trading as well, educating you on the basics till you get to a certain stage where obviously you get the superstar, which of course is Kaya. So, you know, we are very hands-on with helping you with your trading and your education. So yeah, Primus, you know, we believe in relationships, we believe in education, we believe in being there for you. We are a good place to go to learn trading and to get the confidence in trading. So we are. That's a great question. Thank you. Another great question just come in. How do we gain confidence in our analysis? That's a good question. I love that question.
Now that's an interesting one. I could talk about this for an hour, I guess. Results is one way how you can measure your analysis.
Yeah.
However, there's a great book. I've forgotten the author. It's Annie. It's a poker player. I would have to Google that. Anyway, what she says that you always have to analyze also if you were right. Were you right for the right reason, or were you just lucky? And that comes also to your results when you write some sort of analysis, and let's say it's wrong. Let me rephrase. It doesn't turn out that way. You should always analyze: was I actually wrong, or was I just unlucky?
Yeah.
So always analyze whatever you have done in the perspective. Like, was this really incorrect analysis, or were the market just going the other direction?
Absolutely. I think the other way how you can slowly gain confidence in your analysis, and go back to this again, is if you have a trader's journal, a trader's diary, surprise, surprise, I've said that again, you can slowly see what sort of analysis is working for you. And you've got a track record of what is working for you. So by looking at a track record, there you can slowly gain enough confidence with your analysis that way. So I think that will really help you.
And I think as a young trader or new trader, I should say, definitely go through your trades, including the winning ones, not just the losing ones, because again, you want to know, were you right or were you just lucky? And that's a big difference between the two. So I would always recommend writing down as much as you can in terms of the narrative, full sentences. I think this, blah, 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 whatever your thesis is. And then with time, you can, start using keywords and maybe just bullet points or whatever. But as a new trader, it helps actually to articulate certain things. And then later when you go back, you can just realize, oh, my thinking was wrong. No, didn't work out that way. That's not valid here.
Absolutely. That's very good point. Very, very good point. Right, that's brilliant questions. Thank you very, very, very much. I have another question, but it's actually from me to you. Are you going to be on the naughty list or nice list this year?
I think I'm going to be on the nice list.
You're going to be on the nice list. Okay.
Because I think I've done pretty good work on myself this year, on my work. Yeah. So I think 2020, it's been a weird year, but it's been good from personal perspective and professional perspective. So I think I'm going to be on the good list. What about you, James? Tell me.
That's a good question. Do you know what? I think I'm going to be on the nice list as well. No particular reason. I'm just generally being nice to people, I guess.
And
nice in general.
Yes, you are generally nice. Generally.
There you go. Generally. Oh, okay, you slipped that word in. Genuinely nice. I see you slipped that in the end. Very good. Very, very good. Right, that's brilliant. Okay, so that's another episode. Should we wrap up? I think so.
We should wrap up.
Definitely. So like I say, big thanks, guys, for all your questions. Wonderful questions. Please keep them coming, because without you, we have no episodes, we have no show. So please make sure you interact. And remember, we try and construct these little episodes for you. So please, please, please share us your ideas of what topics and feedback, so we can make sure we can cater for what you need. So do you want to say goodbye, Claire?
Just sort of quick summary from me as well. First of all, thank you everyone for joining. Absolutely love these sessions. We've gotten so much good feedback from you, so I'm sure that you love these as well. We're going to try to be a bit more interactive going forward, meaning 2021, we're going to be more active on social media, try to get more direct feedback from you about the topics and about also educational side, what should we cover. However, on the 29th of December, we have a 2020 recap session planned. It's going to be me, it's going to be James, and we're going to have a surprise guests, maybe even plural. We're going to go through 2020 as a year from markets perspective and also just from events perspective. It's been very eventful year, I have to say. So we're going to do a quick recap and we're going to have a projections about 2021. Maybe even we're going to take some bets with James, see who's going to be right.
We do a little, like I say, like a sweepstake, see who gets it right and who has gloating privileges for the remainder of the year. So yeah, this is going to be a really special show. This one, we're going to end the year with something quite unique, and something special because let's face it, 2020 has been a funny old year. So let's end it on a high. So don't forget that's on the 29th, and we look forward to obviously seeing you all then, with myself, Kaya, and two special guests maybe. So on that note, let's say goodbye. Before we sign off, guys, remember, these little episodes are for educational purposes only, and no way whatsoever should be taken as advice. I always suggest you do your own research and do your own due diligence and know the risks at hand before entering any trade. Till next time, every single one of you out there, trade safe.